Morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. On Friday, US stock markets were positive with all sectors higher on the day. Here in the UK and in Europe, we saw some weakness, although still higher over the week, with sentiment boosted by initial data showing that the Omicron variant may be milder versus other variants, and also positive updates from drug makers. The big event on Friday was the US inflation report, with increased 0.8% month on month, meaning the yearly rate was 6.8%, the highest since March 1982. As we can see from the chart, US and also UK inflation has accelerated this year as both economies have rebounded following the recession we saw last year. 6.8% US inflation is in line with what financial markets were expecting, although the fear was a reading would be higher than 7%. If we look at the underlying components and those which saw noticeable price changes over the month, energy rose 3.5%, used cars, vehicles were up 2.5%, shelter, which has a high weighting of 30% to the overall inflation measure, was up 0.5%. Now its highest since 2007. Food prices rose 0.7% over the month, and there was a solid increase of clothing of 1.3%. Why is this important? Well, firstly, if prices are rising, all else equal, people have less disposable income. Also, those that have cash savings in the bank with interest rates at historic lows, they'll be eroded faster in real terms. This really shows the importance of looking to do more with your money and help protect against inflation. What we know is that central banks target price stability. For the UK, that's a target of 2% per annum, while for the US, they look for an average 2% inflation target. The concern for central banks is that high inflation today can fuel expectations of higher inflation tomorrow and the day after, and so on. We can see how US inflation expectations continue to climb in our second chart, and this can then feed through into wage demands, and if corporate pricing power falls, we could see those costs passed on to customers. All this sets this week up for an interesting week, with the Federal Reserve, the US Central Bank, having their monetary policy meeting on Wednesday. They'll decide whether they'll increase the pace at which they reduce their asset purchase program, meaning how quickly they conclude injecting cash into the financial system. The current timescale is completion by June, but with high inflation data coming through, we may see that completion as early as March, thereby giving them scope to increase interest rates sooner in order to tame inflation. On Thursday, we'll hear from the Bank of England, where markets will be keen to see if they finally raise interest rates. Much of that will depend on the inflation data out on Wednesday and the employment data which we'll get tomorrow, but also the developments of Omicron. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.